So welcome to today's webinar. The topic of today's webinar is one that I think is quite unique and not explored very often. So we're really pleased to be talking about micro entrepreneurs and how we can inclusively serve them and facilitate their growth through the design of products, services and technology. We are really experiencing a big drive to digitize, and entrepreneurs can often have lower digital and financial literacy. So we really need to ensure that when we're digitizing services, we are doing so in a meaningful way that genuinely impacts on their financial health. So I hope you'll be enjoying our webinar. Just to introduce you to myself, for those of you that have never joined one of our webinars before, my name is Sarah Corley. I'm Deputy Director at Digital Frontiers Institute, and it's my pleasure to organise DFI's webinar and podcast series. So I hope you have joined events before, and if not, I hope you enjoy today's and enjoy future events with us as well. Just a couple of housekeeping things before I introduce you to our expert panelists. We are recording today's session, so if your internet does cut off, don't worry, you'll be getting a copy of the recording so you can catch up. But also, more importantly, if you really enjoy today's session, you'll be having a link so that you can share with your colleagues who can also benefit from what we learn and what we discuss on today's webinar. You'll receive that recording within the next couple of days after the session. We also are going to have a great panel discussion, but we're leaving time at the end to hear from you and get your questions. So make sure you use the Q&A function, which if you kind of move your mouse or cursor towards the bottom of the screen, you'll see it there and you can type your questions to us and we'll get round to answering them towards the end of the webinar. So let's move on now and let me introduce briefly to our panelists before we begin our discussion. So we're joined by Elizabeth Friend. Elizabeth has experience working with micro entrepreneurs and early stage social impact startups. And she's currently the Managing Director of the Small Scale Sustainable Infrastructure Development Fund. Elizabeth has had many years of experience and it's a real pleasure to have her on the call. So welcome, Elizabeth. We are also joined by Ethel Mpamba. She is the founder of Microfinance, which is a microfinance company focusing on women and youth, particularly in rural areas in Zimbabwe. She was also a second runner-up in last year's African Business Awards, which is a Jack Ma Foundation initiative. So congratulations on that award, Ethel, and great to have you on the call.
Thank you, Sarah. Thank you, Sarah. Good to have you here.
And last but definitely not least, we have Dr. Jackie O'Neill, who is the founding director of Microsoft Africa Research Institute and brings a real passion and expertise in designing technology that enhance agency and create sustainable futures. Simply put, I think solving real life problems with easy technology. So Jackie, welcome. Thank you very much for being here today.
Thank you very much.
So let's get going with the panel. The first question I think it's worth starting with is, who actually are micropreneurs? What are their needs and what challenges do they in particular face? So to kick us off with this question, Elizabeth, over to you.
Okay, great, thanks. I think this is a really important place to start. As you noted, there's a lot of talk about SMEs and even MSMEs, but oftentimes there's not a really clear look at and deep dive into micro entrepreneurs and micro enterprises. So to begin, maybe just one little figure to throw out there. I recently saw some estimates that say that there are about 160 million micro, small, and medium enterprises in developing and emerging markets. And of this number, and again, these are just the formally registered ones, but of this number, about 87% are actually micro enterprises run by micro entrepreneurs. And then when you think about all those that are operating in the informal sector, you realize just how large a group that we are really talking about and looking at here for today's discussion. And I think in order to really help us set the conversation up, it's really worth thinking about this. How do we kind of break up what is a really large and heterogeneous group? Oftentimes, I think it's easy to turn to definitions, and in the case of micro enterprise and micro entrepreneurship, it's a little complicated because there's no actually standard or universally agreed to definition, but a lot of the international governing bodies and development agencies and groups do put forward a number of definitions. And one that is frequently cited is offered by the IFC, World Bank, and they define a micro enterprise as one having fewer than 10 employees and total assets as well as total annual sales below 100,000 US dollars equivalent, right? So that is still pretty big and pretty massive. And so for us to really have a very targeted conversation today, I think it's worth maybe looking at this range in a little bit more detail. On maybe the smallest, on maybe this range or continuum, the smallest micro enterprises are those that one could consider to be necessity-based businesses, often run by single entrepreneurs or solo entrepreneurs. They're more likely than not to be operating in the informal sector. They often are undertaking work because there really aren't many or any other better options available. They typically are ones that have maybe lower skill levels, maybe lower overall financial and other types of literacy. Example might be a craft maker who's selling a product at a local market, or perhaps maybe a gig economy worker. When it comes to the need question that you asked, typically these types of really small entrepreneurs are really focused on just making their daily cash flow work. And so oftentimes these very small micro solo entrepreneurs have been serviced by microfinance institutions, though as we'll get into the conversation, there are changes happening there. They often typically also benefit from various types of training and support, and also other complementary financial products like savings, for example. As we're starting to maybe move into that kind of middle range of that definition I provided, this is where we're starting to see the micro enterprises either be formal or informal. They might be, an example might be a family-owned business. There definitely are general needs they have for working capital type of credit. They often, instead of just trying to make the kind of daily cash flow work and having that type of liquidity, they're also starting to maybe invest in some basic equipment or other machines, for example. And to do that, they often are going to need to turn to maybe leasing arrangements. Sometimes pay-as-you-go structures can be particularly helpful for them. But overall, that working capital debt starts to be a little bit more critical here. And by the time we're kind of moving up to the upper range of that definition, these micro enterprises are more likely to be growth oriented. They're probably going to be working in trade, manufacturing, services, also probably retail. The business models here are often a little bit more standardized. They do have capabilities to be able to grow. They are definitely going to be more formal in a lot of cases, and here they are going to be looking, especially for the working capital loans, like the others. But what's probably a little different here is that they're also starting to maybe tap a bit more into different types of trade or even supply chain finance on the lower scale or end of that, and also different types of credit facilities can be really critical for them. When it comes to that latter part of your question about what are their challenges, there's so many. I'm going to just lead with this of being kind of what's been typical, which I still think is still very much the case. Although, as we're talking about a lot of the digital developments during this call, I mean, we'll add a little bit more nuance about what's changing. But really out there today, when you look at numbers, micro entrepreneurs and MSMEs in general just have a huge unmet financing need overall. And a lot of the issues kind of come from both the supply and demand side. But when you're thinking about the supply side, the financial service providers, at least traditionally, they have really associated micro enterprises in particular with higher risk and lower returns. And there's various reasons for that, but a lot of it has to do with information asymmetries. So micro entrepreneurs are, less likely to have credit scores or formal business documentation. In many cases, they don't have any sort of collateral. And these are all the things that traditionally have been really critical for financial service providers to be able to feel comfortable essentially extending access to credit or other financing to any sort of small business. And that's really, been the same with micro enterprises. Of course, we all know about microfinance institutions and a lot of the structures that they put in to try to deal with that, but it's also pointed to another huge issue and challenge, which is just the cost of actually servicing the micro entrepreneurs, at least traditionally. Oftentimes, these individuals have been really difficult to reach, like either because of physical distance, for example, or just being a little bit more off the grid in various ways. And so that becomes a whole kind of costly endeavor for a lot of the financial service providers, and that has added a lot of complication and created this really kind of pent up need, but then really not being able to effectively meet it with the supply of capital. And it's worth mentioning too that oftentimes micro entrepreneurs have had because so many, not all of course, have been operating in the informal sector. Many have not really had as many opportunities to engage with formal financial institutions. There can be real trust issues that exist. And also traditionally, the process to even go and try to secure any sort of financing has been really long, drawn out, required multiple trips to a bank and a lot of paper and documentation. And there's just no guarantee at the end that you're even going to get the loan that you need, for example. And when you're talking about a lot of the micro enterprises, time is money. Things are very, very complicated, and they just don't have the ability to essentially shell out all that extra time. And of course, there is this other point about just overall capabilities and skill sets. Oftentimes, having the literacy or the awareness, or even just the confidence level to be able to approach more formal or financial institutions to even try to get financing can be really difficult, if not impossible. So I would say those are kind of the big overarching challenges and characterizations.
Thanks so much, Elizabeth. And I think, it's a good start there, trying to help us visualize who we're talking about when we're talking about micro entrepreneurs. Sort of like maybe it's the lady that you buy lunch from, that kind of level, who, when she's queuing to get into a bank, is no longer able to be in her kitchen preparing the lunch that she is serving and selling, so that whole day's income can be affected by trying to go perhaps to a bank, for example. So it's given us a good picture of sort of at one level anyway, and there are different levels within that kind of. That's a very informal example, but giving a picture of who they might be. So I guess the second question, we started to touch on this. So some banks may do. We talked about microfinance institutions, but I'm going to come to Ethel for my second question, because who are providing financial services to micro entrepreneurs? Where are the gaps, and why are the gaps? And Elizabeth started to touch on some of those things, but we know you run a microfinance company, so we're really looking forward to hearing your view, your take on this.
Thank you so much, Sarah, for that, and thank you, Liz, for that broad definition of micro entrepreneurs. Really, these are the people that we are talking about, and we are asking now, who are the people who are providing financial services to these people? And as Liz elaborated already, to say, look, these are just startups. Like you said, Sarah, the lady that you're buying lunch from, would you really put your mind together to say, so where is she getting a funding? How is she surviving? How is she managing the cash flows? And you know what? The role of the microfinance institutions in recent years has become well known. And this is why now there's so much noise about micro entrepreneurs. Therefore, there was that need to meet the microfinance of the micro entrepreneurs. That's where it's coming from. And it dates back to the funding gap that was then introduced by the the popular Grameen Bank in Bangladesh. But now we are seeing the microfinance institutions helping these low-income individuals to start their small-scale micro-enterprises and alleviate themselves from poverty. And we are asking, what are the gaps that are there? And you know, we cannot talk about this micro enterprising and microfinancing without speaking first about the big gap that is the financing gap, the financial gap. You know, just to run over the recent statistics, you know, it is said that especially in our developing economies, it is estimated that there is demand of about 8.9 trillion US dollars in credit facilities, yet the supply is only sitting at 3.7 trillion US dollars, meaning there's a huge gap of 5.2 trillion US dollars. Imagine such a gap. And what are we saying, especially to these entrepreneurs? Like what Liz said, these are just new ventures, and oftenly they do not have enough of a concept. They do not have historical earnings. They do not have assets to justify bank funding, especially in early stages. And this lack of access to capital is the commodity that is referred as the funding gap for micro enterprises. So you see that in mature economies, this funding gap is often filled from many sources, such as cash from friends and family. And you know, in mature economies, there's opportunities for bootstrapping via credit cards and also personal savings accounts, really, and second mortgages on their homes. And as the startup fares, a relatively small percentage of potential high growth ventures will qualify for investments of private equity investors. And also these are like our angel groups and our venture capitalists. So we find they've got opportunities. But for us in the developing economies, we often lack sources of this seed capital. And in particular, the micro entrepreneurs, those that are near at the bottom of the social economic pyramid, they do not have access to these bootstrapping methods or private equity. So in our developing economies, due to our higher poverty levels and our lower access to income, entrepreneurs often do not have their own financial capital, nor can they readily borrow. And imagine also their peers and families are already impoverished, so they cannot borrow from such. So imagine, this is the reason why we are saying there's a gap of 5.2 trillion US dollars in this sector. And it is a huge gap. You know, they do not have collateral like what Liz really explained to us. And, you know, our markets are fluctuating. They are not the markets that will invite even equity investors who are looking for a return for their income. So, you know, this kind of challenges, these are the gaps that we are seeing, especially in our micro enterprises and even the microfinance institutions in our developing economies. They are not meeting the demand that's there for the micro enterprises. I want also to talk about another gap that's there, Sarah. It is the knowledge gap. You know, the knowledge gap includes educating individuals about the difference between charity, lifestyle businesses, and commercial growth opportunities. It is a gap, and a true gap, which is also a gap that contributes to the funding gap that we are seeing. And in developing countries, often we have raw entrepreneurs, we have got little talent and little past technical and business experience. And you know what, in our developing economies, scaling a new enterprise takes a significant effort. And many investors have cited that management is #1 factor in a new venture's success. And because of that, this is also a gap that we need to look into. And it is a gap that we have to talk about when we are talking about the gaps that are there that cause this funding gap, why our micro entrepreneurs are not being recognized, why is it difficult for them to access capital, why is it difficult for them to grow their micro enterprises. And another gap that I want to talk about is the resources gap. You know what, in our developing economies, it is, we have often a weak culture of entrepreneurship due to lack of role models. It's actually totally different. You know, I interact with many women in business. I interact with so many micro enterprises, and you'd want to hear their vision. You'd want to hear what they are looking forward to, the legacy that they would want to leave behind. They are not knowledgeable of that. To them, they want to first satisfy the first hierarchy of needs, the first Maslow's hierarchy of needs, the physiological needs. And that is it to them. And this creates a gap for us, you know. So they're seen apart by the tendency of micro entrepreneurs to cannibalize each other's markets instead of responding to the competitive landscape of differentiating product offerings. And at the end of the day, it happens to have a market saturation. You know, I've got experiences where you find a certain micro entrepreneur in a certain business, and the way that business will go viral, the moment that others see that this micro entrepreneur is succeeding in it, they copy exactly the same concept. They do not even try to differentiate. They do not even try to answer to the market. And often what happens then, such practices then dilute the overall profits of the whole micro entrepreneurs in that sector because of that lack of that. They've got a general feeling of hopelessness, you know. So they want to do a business that has been proven by the next person and in which the next person has succeeded. Automatically, it creates a gap in our micro entrepreneurs. And it's so different in mature economies. You know, I want to bring this, I was looking at it, Sarah, in a manner that what's really bringing it the difference, especially in our developing economies and those mature economies. In mature economies, in contrast, they've got greater understanding of market dynamics and they benefit from a culture that is more oriented towards entrepreneurship. The market there, they also welcome new ventures. They try to be there for their new ventures. They try to be there for their new entrepreneurs, and they are ready to educate them to the next step and for them to see a bigger vision and a better vision, you know. So already an entrepreneur in a mature economy has got an insight of the future, what the future should look like, because there's got a role model, there's got a mentor to take by the hand. But for us in developing economies, we are seeing this gap, and as a result, it's just us trying to replicate models that have worked in other economies, which might not even work in our economy. This is a big gap that I feel in my experience, especially in the microfinance sector. Even if then you try to introduce a mentor to one person, because to them, they first have to satisfy the basic needs. They cannot really invest in their future of their micro enterprises. And it's a painful thing, but you know what? We are happy with what we are seeing in the market. The introduction of digital platforms, the knowledge sharing that's all over, you know, it's actually bringing us some insights, and it's giving us another insight as micro entrepreneurs in developing sector to be able to have a foresight, to be able to have a better vision, and even to answer to our market needs, because that's all there is. Entrepreneurship, Sarah, like what Liz is told us before, it's us answering to the opportunities, to the needs of our markets. And that's all there is. The moment that we start answering the needs, the bigger our enterprises will become and the more successful that we will become in the future. So basically, this is it.
Thank you, Ethel. It reminds me of when I remember talking to some market traders when I was in Nigeria and asking why everybody was selling tomatoes. And it was like, well, that was the crop that everyone was growing and nobody seemed to have anything different. Like if I wanted something that wasn't tomatoes, it was going to be quite hard to find it. And I think your point is really interesting there, like having that kind of the space to create, to think differently, but also the support to help you think that way. So it doesn't come naturally to everybody. And you started to touch on it there, Ethel, about this idea of digitalization, which kind of leads me on to my third question, and which is towards you, Elizabeth. We know there's a gap. We know there's a gap with helping with finances. We know that this 5 trillion, probably way more than that in reality. We know there's a gap in kind of approaches, knowledge, skills. The ability to be an entrepreneur. How can we're trying to digitalize? So how can digitalization help fast track those things? So how can it contribute? How can it maybe make it cheaper and easier, for example, to reach more customers?
Absolutely, and that's a really important question, and like really the kind of exciting opportunity that we all have right now. So I think it's first worth noting that it's that the whole idea of digital finance is not brand new. I mean, over the last couple decades, there has been a slow march to increasing digital and online financial services, but I would say it's really just been the last number of years that there have been a series of technological advances, things like the ability to use machine learning, very sophisticated algorithms to assess creditworthiness, paired with just a better connectivity made possible through infrastructure, the ability to, for example, even get a decent cell service out in the middle of nowhere now is really changing access, at least theoretically, and that is really important because as more and more people all over the world come online, and when you look at numbers and figures, you see that most of the data is actually being generated in more of the developing and emerging markets sort of on a whole, and kind of as a percentage increase every year. And that's really notable because each time someone, a micro entrepreneur, is able to go online through, especially a smartphone, but even through some, feature phones, does mobile money transactions with digital wallets, and even using apps, like there is more and more information being created. And what's been really exciting is that, as Ethel, you mentioned, there's a lot of digital platforms and even banks, traditional banks, and especially even neo or new banks or digital banks coming on board that are really saying, all right, look, there's actually all this really interesting alternative data that now exists. We can actually use this and overcome a lot of these barriers that have traditionally been so problematic in order to really essentially cut costs, streamline credit assessment, as well as for example loan delivery, as well as kind of servicing and collections as well. And I think that these are really important pieces. And to Ethel, your point about there just also being kind of a skills and knowledge gap. What's also interesting is that many of these digital platforms, whether it's an e-commerce provider or a fintech company that is, for example, providing really small, essentially nano loans after doing a kind of mobile scraping for credit worthiness. I mean, what's really interesting is that there can be little auto deductions made. There can be value added training around financial literacy embedded in, and there's all different ways that this is being done now. Sometimes it is more audio driven for areas and for groups that have lower access, and then sometimes it is kind of full blown visual visualizations. But taken together, what's really exciting is that all of these new technologies developments are coming together in a way where it is at least opening up the opportunity to essentially cut out the costs, take away all the kind of trust and time waste issues, design better quality financial products that actually meet the cash flow needs of micro entrepreneurs, which are often sort of uneven or unpredictable. And of course, as we saw, like there's such a range. If you're a solo entrepreneur, you might just need a small loan, but if you are more of that 10 person micro enterprise, you might actually need some supply chain finance on some level to manage your inventory. And so now that there are all these new groups emerging and customizing that service and looking at like transaction records and data points to just get more and more information to not only just do a better job theoretically, but also to just extend credit in the first place and save costs all around. It's just a lot of potential and a lot of promise. But that being said, it's not all just, oh, perfect, we have the capability of it, and so therefore everything is solved. I think the reason why we're talking about micro entrepreneurs today is that they just face so many more additional barriers and challenges. And so I think that's going to be a really important thing that we spend some time looking at.
And I think that's exactly what we should do by moving on to ask Jackie for her input and experience. So Jackie, we've heard sort of a lot of the positives, and I think, we're all on board with the idea that, we do need to do something, and maybe digitalization helps reach more people in a more customizable, more efficient and effective way. But there are going to be downsides. These are micro entrepreneurs are often people already with low literacy levels, possibly never used a phone before, if that's where we're expecting them to use. What are the challenges and disadvantages, and what do we need to be cautious and careful of?
Thanks, Sarah. And my network's terrible. Do let me know if I need to switch my video back off again. So yeah, I mean, there are so many advantages, and I obviously work in the space of thinking about how we can do digital finance. So I obviously think that the advantages outweigh the disadvantages, but at the same time, it's really important that we understand what some of those disadvantages and challenges are. And one of the most important ones to address here is that technology can actually amplify inequalities. And that's something to be really importantly and aware of. It can widen the digital divide. So we really need, whenever we design something, we have to think, who does this exclude? And be very specific, because, for example, if you design a technology that requires a smartphone, then obviously excludes everyone who doesn't have a smartphone or doesn't have access to data. And that can be particularly challenging when we think of micro entrepreneurs, particularly when we start thinking around gender, because who are the people who tend to have the smartphones? If there's a smartphone in one house, there's a lot of research that shows that often women are the people who don't have the smartphones, and this can vary depending on the area and the place. So this is really, so it's not enough to say there's a smartphone in the house if the people who actually really need to be using it cannot access it. So it's a really important question that we need to address. Obviously, there's some interesting ways around this. A lot of companies actually enable people, and even some microfinance organizations enable people to buy their smartphone as part of that package. So there can be some interesting things there. But then once you've got the phone, you need to be able to use it. And this is where people with lower technological literacy and lower reading literacy, it can be a real challenge. There are design solutions we have around this. We can design for low literacy, and there's been a lot of work. Indrani Medithis, for example, has done a whole body of work on how you design interfaces for low literate users. And then another thing that's really important is language. What languages does your interface use? And particularly, again, when we're thinking about users who don't read and write, speech interfaces are fantastic, but then you need to have speech interfaces in the local languages. So it's really important that we as a technology community, as well as the microfinance community, actually have a body of work going on to create the infrastructure for that, which is really thinking about how do we create language models for under-resourced languages? How do we collect data? And this can only be done as an open source, open data, large program with for example, if we're talking about Africa, with the universities and the organizations in Africa, because to make these models requires input from so many different people, because the data to train them is a problem. So there's something that's a really interesting challenge, and it's not going to be solved soon, but I'm excited that so many organizations are working on this. And then another disadvantage is around the visibility that technology can bring. And this is interesting because visibility can be both a very good thing or a bad thing. And it's not neutral in itself. A lot of it's around what data is collected, who owns that data, who uses that data, how that data is made available. And it also depends a lot who's in power. You know, if you've got a great government, you're probably, and a democracy, you're probably okay. If you're in a minority group, in a country, you may find that you're being penalized. So there's some interesting challenges there, and those ones I definitely don't have the answer to. Thank you.
Thanks, Jackie. And I think, you know, it's really important, like you said, having that end user in mind when you're designing. So just creating something. And also, I think the temptation is to look at what we currently have and just digitalize it. So sort of taking really horrific 10 pages of paper that you have to fill in and then just simply putting that online, actually not digitalizing it, you know, it's not helping in any way. But I think it's really interesting that you talked about, you know, designing specifically interfaces for those with low literacy. It will look very different depending on maybe even what scale, whether we're talking about micro entrepreneurs who are just starting up and, you know, one person working on their own, through to companies who are, you know, at that point of scaling. That they're very different needs that we talked about earlier will mean a very different kind of design in the services and products that we're giving them. So Jackie, can you tell us more about, you know, how can, you know, we designed our tech, our products to really, you know, improve the financial health of our micro entrepreneurs, especially towards the bottom of the pyramid?
Absolutely. And I mean, I mean, all of you, just think about your internet banking that you use. Like, is your internet banking accessible? Is it accessible to you? I have used internet banking in France, in the UK, in India, and now in Kenya, and they're all a nightmare. And that's for me, and I have a PhD. Not in internet banking, I have to say. So imagine trying to just use that, you know, and the reason for that is a very simple reason. It's because the banks design the systems with their own processes and their own models and the way they think about money in mind. The way banks think about money is not the way that we think about money, the users of the bank account. So that's your first and really your most important principle, which is you have to understand the people that you're designing for, the micro entrepreneurs you're designing for. And as you mentioned, Sarah, it's not that they're just one group. You know, both Elizabeth and Ethel have talked about the variety of different people. So you need to think, you know, I'm designing for this group, you know, it might be market traders somewhere, or I'm designing for companies that are about to scale. These are different things, but you need to understand. So methods like ethnography, like co-design, iterative design, where you work with your user, are really, really important. When we designed a system, Prayana, for auto rickshaw drivers, and it tries to present financial information in a really visual way. People who don't read very well often can read numbers, and so you can use numbers, and you can use colors, and you can use graphs, and you can use pictures and representations, and these sorts of things. But another important principle is that microfinance is a high-touch industry. And a lot of the designs I see try to design the people out of that. And by the people, I mean the middlemen, the field agents, the people who interact with the microfinanciers. Yet actually, those people are crucial when you're working, you know, maybe not once you've got your business off the ground and you really know what you're doing, and you don't need to see that person. But when you're just starting out, often the people, the field agents, give them business advice, they give them financial advice, they get to know them, they get to understand their lives, they support them. So we shouldn't try to design the people out with our technology. We should understand that those people are a really crucial area, and then we can design technology for the people to help them be more efficient and effective in working with the people who need microfinance. And obviously then you'll have other people who are like the micro entrepreneurs who are really technically skilled. They don't need to interact with a person all the time. But one question I often think about is, if you look at Western banking and Western banking practices, you used to have a bank manager, you used to have an interaction with someone. That's all gone. It's all gone digital now. That seems great in terms of efficiency. But what we don't know is how many small businesses, how many businesses run by young people end up failing that wouldn't have failed if they'd had someone to talk to, someone to support them, someone to help with that interaction. So we should not be trying to just replicate what we have in Europe or in the US. In fact, Europe and the US might like to rethink how they're doing their finance for young businesses and for micro entrepreneurs. So these are really important things. And the problem is, of course, you can't measure how many businesses wouldn't have failed. So because it's not measurable, it just becomes a data point we shouldn't think of. But when you look at the work that people who work with the micro entrepreneurs do, it's much, much more than just taking some money off them or giving them some money and then taking it back. They do a whole set of work. And if you remove that from the most vulnerable people, then it can be a real challenge for them and they can end up failing. So that's really important. So technology has a role, but it should be supporting the people rather than trying to get rid of the people. And that, yes, I'll stop there and let other people jump in, because I'm sure Ethel and Elizabeth have some ideas too.
Brilliant. I'd actually really love to go over to Ethel next, because, you know, maybe you can sort of fill us in with some concrete examples of what you've done in the field that's worked and why, Ethel.
Thank you so much for that. And I really like what Jackie was saying. It's all about understanding people, and let technology answer the needs of the people, not for the people to put their lives into this technology. I think it's very crucial. And like she highlighted, we are seeing this in many financial institutions where we are just taking a product and trying to force it in a market that cannot embrace it. Imagine, I can imagine how many clients of mine would not have smartphones. And for example, for Microfinance, then to introduce an app that requires a smartphone, it will not answer to what they want, you know, at the end of the day. But, you know, digitalization really make us move more strides and be able to serve even more people. You know what digitalization is doing? I've got an example of an app that I'm still learning at the moment, where these traders can actually issue e-receipts via text messages on their phones. At the end of the day, they can reconcile their sales. They can do their simple income statement, because they've got the expenses in the phone and they've got the income in the phone, and they can do the reconciliation at the end of the day. So by so doing, automatically they have records now. You know, record keeping has been a very, very big issue to micro enterprises. And this is where the whole lot was starting to say, how can we be confident in funding Ethel's business, yet the business cannot speak to us in terms of numbers. So we are seeing that this digitalization is really giving us so much hope, especially to our small entrepreneurs, and even for them to have that knowledge to say, okay, at the end of the day, after the day has ended, if I made a profit, if I made a loss, what am I really working up to do? And how can I better myself? How can I better my enterprise so that it can be profitable? Because back then, they would just be trading and they would live hand to mouth. They would not be able to distinguish between their sales and their profits. But now with the apps that we are seeing, where they can record their they can record their cost of sales, and they can see what has been the actual profit, what has been the margin to my business. It's amazing. You know, microfinancing is becoming easy by the day. especially with the records that we are now seeing, the little records that they are now keeping. At the end of the, for us, we actually like try to communicate with them on a daily basis, like what Jackie said, that, you know, there's more to it just than giving money and collecting. So we make sure we check their income statements on a weekly basis, because the moment that you want to search to a month, so they've lost some of the data. So you try to be there at the right time, at that particular point in time when the data is available, for you to be able to have a credit analysis for them, to have a credit assessment for them, for you to be able to say, okay, so how much are you worth now, and how can you improve your business? So for me, digitalization, ladies, it is actually giving us so much hope, and it is giving us so much light into the future of how much we can do with entrepreneurs, and how much can we push them to see their future, so that they can grow, and they can even be able recognized by venture capitalists and even equity funders at the end of the day, because this is what we want. There's so much talent in these micro entrepreneurs, and to think of it, the jobs that they're creating for our economies, you know, the contribution that they're making to our GDPs, it's massive, and they need to be recognized.
Great, Ethel and Elizabeth or Jackie, do you have anything else that you want to share? Some good real life examples? I mean, I think it's amazing to hear Ethel talk so fluidly about, you know, actually how you know, one, it's not actually about giving the loan and making the money back. It is about, okay, then helping them understand the difference between profit and loss. When they're making a profit, how to keep growing their business. It's about taking them from here and, you know, growing them out. Any other good examples that you have, or any other like business models that you might want to share with us?
Sure, I'll hop in. I've over the last year or so, I've had an opportunity to talk to different fintech companies that are looking at MSME finance overall. And one particular group that I find has a really fascinating model is called Tala. Operates in a couple different countries, and it's geared very specifically toward micro entrepreneurs. And of course, this gets into one of the access issues that you raised, Jackie. But if one does have a smartphone, Tala is able to, I mean, they request permission, and they have certain data privacy and other use restrictions that they do try to make quite clear to any potential micro entrepreneur users. But then what they do is they collect a number of different alternative data points from the smartphone itself, almost in the background, without actually having the micro entrepreneurs have to really actually actively provide information. So this can be a whole range of things, you know, device data, transaction data, like you were just mentioning, Ethel, too. And then ultimately they're able to feed the alternative data points into their algorithms, and through kind of machine learning over time, they have a better sense of kind of which data points or combinations ultimately would suggest that this micro entrepreneur would be, you know, a safe sort of credit risk, if you will. And so then what they do is they are able to quickly turn around and disperse a loan to the entrepreneurs. And the starting point, which is, I think, an interesting and notable point with Tala's business model, is that they're going as low as, I believe, about $10 in a couple of their markets and up. And so when you are thinking about really those kind of nano entrepreneurs, that really the smallest of the small micro entrepreneurs, that kind of capital and a little bit beyond can really be game changing, and really then help to start providing a much clearer sense of capacity and really willingness to repay. And that is, to your point, Ethel, really important, because you're actually seeing what happens over time with, you know, with the actual transactions and the kind of statements and things that are generated. And then that can actually open up, you know, a whole other kind of set of opportunities. And what I also find interesting about Tala's model model and the sort of smartphone-based piece is that they've also been working on ways to provide a lot of that financial education as well, alongside, which I think can be quite powerful. And so it's not only just like, okay, here's some funding, like, good luck. And in, a lot of times these things can be a little bit tricky, and especially during COVID, they've also created sort of a new fund and a new system to really help make sure that as a lot of these, the most vulnerable micro entrepreneurs, as they've experienced a whole set of shocks to their operations because of global lockdowns and whatnot, that they have been able to get some relief and reprieve and still at the same time kind of learn and get access to critical financing. And there's always challenges, and I think Jackie, your point, like do you even have the smartphone in the first place, is a really critical piece. So it's not that every single business isn't a model that is put out there to has 100% worked out all the details around access and whatnot, but I feel like each time one of these newer concepts, newer models is coming to the fore, we're actually learning something as a collective group of practitioners and financial service providers about really what can look and what does it mean if you really do take the time and think about what the specific needs are of the entrepreneur that you're working with. So I'll throw that out there as one particular interesting example.
And I know if we've got to watch time, but if I could just add to that one model that we shouldn't forget about, and that's really important, is thinking about how we can enable peer support. So often when we're thinking about micro entrepreneurs and digital finance, we're thinking between the digital finance company and the micro entrepreneurs, but actually many settings, peer support's been used for a long time. But in person, we have savings groups, we have charities, we have a lot of things like that which provide ways of savings. And we saw this was really effective with the auto rickshaw drivers. Not only did they have communal savings groups, but the organization 3 Wheels United that works with them also set them up so that they're gradually doing more and more of the work themselves. So it becomes more of a cooperative and a collaborative effort, and everyone's engaged, and it's really good to have models like that. And I think probably the pandemic has taught us the value of peer support, and also taught us that while we can do some of that digitally, face-to-face and social is absolutely crucial, but that doesn't mean we can't support. Just like I was saying, we could support the people who are working with the micro entrepreneurs, we can also support face-to-face groups and enhance communities, and think of ways we can do that. Often we tend to think of digital as just like removing the people and making everything remote, but I think one positive thing, which there aren't many that's come out of this last year, is that I think we all realize the value of connection and networking, and so I think there's a lot of opportunity to design to support communities of micro entrepreneurs to come to success together. And I think, coming back to what you're saying, Elizabeth, about the shocks that people have experienced, this is really difficult, and we're working with small to medium enterprises at the moment to understand how COVID's impacted them. And many of the most successful ones have had to completely change, or not completely change, but really quite drastically change what they're doing for their business, not just how they're doing it. And obviously being a small business gives you the opportunity to move quite quickly. But one of the problems is if you're really just getting by day to day, you often don't, like Ethel said, you often don't have the space to think about anything other than surviving. And I really believe that by designing for peer support, we can maybe help even people who are really struggling do better.
Ethel, did you want to add?
Yes, it's just an article that I was reading today to say, you know what, there are now over 400 million smartphones in Africa. And in the next 18 months, it is believed that there will be more Africans with smartphones. So I think there's so much hope for us. And we just need to see the future and try to shape the future today and make sure that we'll be able to include almost everyone, because right now the statistics say in every family, in every African family, there's a smartphone, at least one. So we are getting there. We are getting there, Jackie, and this is where we are going.
Brilliant. So what I'm trying to sort of bring together some of the conversation as we think about closing in those last few minutes. You know, we've identified like two main types of gap. There's sort of a skill and a resource gap, which is around, you know, understanding what it, you know, what is even the simple things like you say, the difference between what is profit, what is loss, you know, how much money you've made, what is my own money versus what is my business's money. Where do I even go to get money? You know, what is a good business idea? Should I just copy what my friend does, or should I try and do something unique and different? What, you know, are lots of people going to need to buy my product? Some of those things that, you know, that we may be make assumptions that people may know more than they actually do know. So there's support that we need to provide there. And we know that there's a finance gap. You know, finding the ability, you know, like $10, as you were saying, Elizabeth, can actually like massively transform a nano micro entrepreneur to, you know, to be able to do leaps and bounds in the growth of their business. $10 is nothing to some, it's huge to others. So there is a financial gap, there's a skill and a knowledge gap. So we need to tackle both of them, actually. We can't just tackle one or the other. And I love, Jackie, how you brought in the idea that, you know, like peer support and agents, you know, I mean, I remember even now I hate transferring sort of larger sums of money on internet banking, because I always think, oh, what if it goes wrong? But we've been doing it for years, but I'm still having that kind of personal feeling myself. So imagine what it's like to send the only $1 that you have in your pocket via mobile money for the first time. That must be absolutely terrifying. And having agents, you know, or if a peer, maybe even if it's not an agent, you know, that help you in that process can be really important. So we've got kind of a community, the role of the human, of other humans to factor in this as well. And we're not trying to take humans out, like you said. We are actually trying to figure out how can technology better support. So, you know, those agents or those groups, you know, are there like online, you know, resources that they could use that maybe use to train their customers? So rather than having to tell everyone the same thing every time, they could maybe show something. Is there data that they can collect right at that detailed level that we can use for the alternative algorithms that Elizabeth was talking around? So, you know, how can we harness technology really to bring these people who are, as Ethel quite rightly said, you know, contributing massively to the GDP of the economy. You know, I mean, so many things. How would we all survive if it wasn't for those micro entrepreneurs starting up some of those businesses that we all use on a daily basis? So, you know, how can we bring technology that makes it easier to grow and develop, and not just have them survive, but actually, as we've said, you know, scale up and hopefully bring themselves and their family, you know, out of poverty into having, you know, a more financially healthy life. I've really enjoyed today's session, and I just want to come around because I'm sure each of you have got your own individual key highlight from today. So just sort of do one more last round robin before we close. What are your final thoughts? Elizabeth, I'm going to start with you.
Sure. I'm feeling really optimistic about where we are going. I think in the next couple years, as so many more of the fintechs and new digital banks and others are really refining their own business models, seeing what is really working, there's going to be a drive to capture more market share and to provide better and better quality products and services, especially to those that are really not truly financially included, or in some cases, you know, underbanked or underfinanced, which definitely aligns with the micro entrepreneurs that we've been talking about. And because of the sophistication of a lot of the systems and just how much more frictionless everything can be if they're designed well, I do see a lot of positive opportunity to address the finance gap as well as the skills gap. But I think we have to be very diligent and very, very careful that we don't forget to stop and ask all those critical questions that you are raising, Jackie.
And Jackie, shall we come to you next?
Sure. Yeah. I mean, I think I'm optimistic too. Although, you know, right now is an extremely tough time for so many people in so many places. But I think, you know, when we're thinking, I think there's definitely a role for digital. It's just that we need to make it human-centered. I think that's the key. And human-centered doesn't just mean asking a couple of users if they like your interface. It really means about thinking everything that you're supporting, you know, how you support the users, who you exclude, and remembering that people are absolutely crucial. We can't just get rid of them by digitizing.
And Ethel?
Thank you, Sarah, and thank you, ladies. You know, for me, I feel excited in me. I call myself a financial inclusion evangelist. So, you know, that at that point in time when you have evangelized, and you're thinking you're hitting a dead end, and all of a sudden there's so much bright light at the end of the tunnel. You get the excitement that you get. So for me, digitalization is actually given me so much excitement in my spirit to say, okay, we are now being able to make sure that that financial inclusion that we've been always preaching about, evangelizing about, it has come to reality now. And though COVID-19 made its own downturns, but it brought us something, and it has pushed us even more faster to where we were thinking it's miles away for us to be able to reach. So to me, it's something, there's always a positive in the negatives that happens. And for every rose, there's a thorn. So for me, I look at the beautiful flower, at the beautiful color of the rose, and ignore about the thorn. So, you know, I'm excited, and I'm hoping that, especially with digitalization, for me especially, I am moving milestones, and I'm making sure that I'm taking my part, and I'm making sure I'm not leaving any stone unturned wherever I accept and wherever I can reach. Thank you so much, and thank you for this opportunity, Sarah.
Thank you so much, Elizabeth, Ethel, and Jackie. I've really enjoyed today's session. I think it's really important that we talk about the challenges, the issues, the problems, because that helps us be able to pivot and think about what the solutions, the genuine solutions are. And as I think that word, that human-centered design, I think anything that we do, we have to do it from that perspective. What do you know, if we understand what our customers' needs, problems and challenges are, and we can find a way to meet those, then pretty much we should be on a path to success and inclusion. So thank you so much for joining me today. I really also thank our attendees for being on the line with us for the last hour. We hope you enjoyed the session too. And I look forward to seeing you all on another webinar again soon. Have a wonderful day, everyone. Bye-bye.
Thank you.